What is up, traders? Hope everybody's doing well. Today is a continuation for the bias lectures. All right, so we're going to be getting straight into it, going from top to down, full analysis as to how we would have taken trades, why we wouldn't have taken other trades, right? So, starting off, let's go to the daily chart. Coming into the day, obviously, what we can see here is this. We have this daily inefficiency, which we tapped into the day prior, right, and closed on a, we didn't close above the wick. We wicked and then closed under it. We have this inefficiency. So coming to the day, yes, we could see some sort of retracement into this daily range, or we could see a continuation. It's 50-50. We still have some of this inefficiency that isn't filled, right? Part of it is not filled. It's not like we filled it completely and now we're looking to inverse it. No, we just barely tapped into it and now we're looking to fill it. Okay, that's a possibility. Or since we swept and closed lower here, we could see some sort of reversal or some sort of retracement, into this range, which is totally acceptable, right? We don't want to forget that we do have buy-side liquidity, which is all-time highs as of this recording, right? So we have this all-time highs right here. So like on the daily, there's nothing that's really pushing one bias over the other, right? That's what I'm trying to get it to here, right? So we drop down to the 4-hour. Now we can see a little bit more detail. We can see this 4-hour buy-side imbalance, sell-side inefficiency, which is a BISI. We can see here, this is pre-market, right? So this is the candle that's printing before, because this is a 10 a.m. candle, right? So if we come to the market, let's say at 9 a.m., this candle is still active. So in this candle, we could see how we're kind of respecting this 4-hour buy-side imbalance, sell-side inefficiency, right? After we're in a clear bullish trend, okay? We have price coming down into this inefficiency and it's respecting it. Cool. So now we're kind of leaning more on the bullish side. We're in a bullish trend, respecting bullish order flow on the 4-hour time frame. So now we're going to drop down to the lower time frames and see if we can get more detail, right? More confluence. We drop down to the 1-hour time frame. Now we can see even more detail. We have this big order block on the 1-hour time frame, which we can see I have marked out here. Price came down during what time? This is pre-market, 6 a.m. in the morning, right? This is 9 a.m. So when you would come to the charts, this is the candle that you're looking at most likely, right? This or this. It's one of these, right? So come down, sweep this sell side, which we're going to see more clearly on the 15-minute time frame, right? Come down, tap into this 1-hour inefficiency with this order block, respect it very nicely. Now, if we zoom in, we have this 1-hour fair value gap that got created after this sweep. I mean, with this sweep, looking at it, okay, yeah, this sweep and this close, this just shows me that we're going to drop lower. And we did actually. We did drop lower, right? We broke structure here, but with no strength. All we did was, again, why did we break structure here? It was only to tap into this order block, this inefficiency, and we can see that it's not bearish, because if it was bearish, then this hour candle would be respecting this sell side imbalance, buy side inefficiency, which didn't happen. We came up, we inversed it immediately. All we did was come down, take out sell side, which we're going to see on the 15-minute time frame, tap into 1-hour order block, tap into a 1-hour fair value gap right here, right? Buy side imbalance, sell side inefficiency. Rejected immediately, closed above this inverse, this fair value gap, which became an inverse, right? So now it's like 80-20. We're bullish, right? We have all these factors on the higher time frames. We're bullish, right? Now I'm trying to look for an entry or a reason to enter to target these highs, which happen to be London highs, okay? So if we drop down to the 15-minute, we can see how this drop right here came and took out all these lows. We have relatively equal lows right here, right? This low, this low, this low. Price came down, swept it, tap into the order block, rejected higher. We do also have a 15-minute inverse right here, which got a fair value gap, which got inversed. Beautiful. This is also a BPR right here, which you can see price. If you take from here to here, right? This is a BPR, this small region right here, and we can see how price, right? We have this fair value gap, including the volume balance, and then this fair value gap. What's the overlapping portion? It's this small portion. And then if we take it and we can see how price just beautifully respects it multiple times. So we have that 15-minute BPR. We can see how price At this point, came down. The still market did it open right here. With market open, we have this candle come down, tap into this 15-minute order block, this 15-minute BPR and fair value gap right here. Respect it, start to push up, right? So 15-minute is showing us bullish order flow with all the higher time frame confluence. We drop down to the 5-minute. All right, 5-minute, same thing. We can see this come down to this 15-minute inverse. We push up with this nice, very nice 5-minute candle, and we close with a 5-minute fair value gap. So right here, I'm looking to enter. Why? This is the macro. 1040 or 945 right here, 1015. So we're in the macro right now, right? So with this 5-minute bullish fair value gap in a close, breaking structure, right? I'm looking to enter anywhere here to target London highs, which is a trade that I took and resulted in a break even. Why? The markets here on this day were very, very fickle and they were not the easiest to trade, right? So you need to identify these kind of days and manage your risk accordingly, move stop loss to break even to not really get stopped out on a lower probability setup. So see all this choppy price action, market opens right here, come down a little bit, sweep out this sell side on 1 minute, tap into the 15-minute fair value gap, which is also 1 minute fair value gap. They're inversed, push up, break structure, nice. Now, where's the 930 fair value gap? It got created right here, and this was during the right here. You can see that, right? 930 fair value gap, right here. This inefficiency, the first inefficiency that happened after the open. You can look. This is the open. There's not one inefficiency that happened until right here. Okay. And that just tells you how market is very, very fickle. If you get a 930 value gap that gets created at 10:01, that just shows you, I mean, market is not in a rush to go anywhere, right? So first entry that you would have taken after you've acknowledged that, okay, my bias is bullish. You see the 930 value gap being created. It's a bearish fair value gap. As soon as it's inversed, which you got inversed here, and I took this entry here, stop loss below midpoint of the wick right here, right? Which is this right here. Take it from the low to the high, below midpoint, okay? Or if you want to be very, very aggressive, you can just put it below the 930 value gap. But especially in these conditions, I'm not looking to do that. I am looking to give price space, so I'm putting it below midpoint or cost my encouragement of this wick, right? And then TP was at the London highs, which what happened is price came up, entered here on this wick, came up all the way very close to my TP, reverse, topped me out at break even. Okay, so this was a break even trade. Cool. It was during the macro. Now what do? We wait. We wait for the second macro or a reason to re-enter the trade. We wait. Price really does nothing. Comes back down. This is the 1045 macro right here. I'm going to mark that out in a horizontal line right here. Boom. This candle. Oh, oops. It's this candle, 1045. Let me get rid of this now. All right. That was just outlining, I believe, the 10 a.m. candle on the, okay. So what do we have here? All right. The macro hits. My bias is still bullish. I want to see these London highs taken because of all that from higher to lower time frame analysis. We went down from higher time frame daily, 4-hour, 15-minute, all the way down to the 1 minute, and we've acknowledged and we've established that we are bullish. So I want to see I just need a reason to enter. Right, that's all. All I want is a reason to enter the market. So what we see here is macro hits 1045. All right, I'm bullish. I want to see price start to move to the upside. Cool. We get a break of structure here. Breaking structure on the 1 minute, inversing the 930 value gap, and we have an SMT with ES, which we can see here. Let me go on to the 1 minute on the ES to show it. So SMT with ES right here, right? We can see, look at the cursor, look at the time. See that, 1041, 1002. We can see ES made a lower low, whereas NQ made a higher low. So that's an extra confluence to enter longs. So SMTs, time of day, 1045 macro, 2nd a.m. macro. We break structure right here. Inverse the 930 value gap. Look at all these confluences. Now we have, which was once before a order block, right? We have down, up, and then down. So this bullish candle is an order block. You could be using that, but since you have the 930 value gap that's right above it, Do you really want to get this entry? No. And in this case, if you were asking for that much of preciseness in price, you would have missed this trade. You have the 930 value gap. You got it in first. Just enter on the tap of it, retapping it. Or you don't even need to, like, price closed here. There's no need to be very picky. I mean, the difference in price, this is something that even I sometimes get caught up in. It closed here. The difference is it's 2 ticks off the 930 value gap, and it's 3 ticks off of the order block if you were to enter off the order block. Is it worth risking losing the entry just because you want that extra 3 points or 2 points or 1 point? No. Market, if you have multiple PDRAs that you can enter off of, like for example, in this situation, you have this fair value gap, right, on the 1 minute, and I outline it right here, right? We have this fair value gap, and and you have this 1 minute breaker now, right? Because it was an order block, now it's a breaker, it's inversed. Cool. And we have the 930 value gap. So which one do I pick? You pick the closest one, if it makes sense with the risk, obviously. And they're all in the same region almost. So why put it here? Why put it here? No, put out the 930 value gap. In this case, if you waited, you would have never gotten the entry. And for me, honestly, I don't recall even waiting. I think I entered as soon as this candle closed, and I just entered because it just doesn't make the difference. And I put my stop loss below this low right here, risking about 19 points. And then TP was obviously my original TP at London highs, which price hit it very, very nicely for a nice 2R trade, 2-to-1. So that's how you determine bias. And then obviously after that, price just consolidated a little bit. So this was around, 12:45, obviously the macro, we started to spool up, and we made a new higher high, and then we just consolidated through the close, right? So that's gonna be it for this lecture, right? So same thing, same as the previous lecture, just going through from higher time frame to lower time frame, trying to figure out where market wants to go off of logic, right? All of the things that we've learned, fair value gaps, all these kind of things, and kind of determining where the hand is heavier, right? Where the odds are more. Is it to the upside, to the downside? Are we not gonna move? All that kind of stuff, right? If you need to watch it again, feel free to do so. Hope you guys found this insightful. And until next time, stay safe and happy trading.